Yeah, what's up guys, welcome back to my channel. This is FS Trader right here, and in this video I'm going to be sharing with you simple volatility 75 trading strategy. Okay, but check volatility 75. The strategy is not going to work right now on 75, and I will tell you the reason. So I decided to use volatility 50 to also share this strategy with you, because I know it works both on 75, 50. In fact, any volatility at all, it works on both 75 and 50, guys. So I think the lowest lot size for volatility 50 is 3. So we are going to be buying volatility 50. Okay, so we are going to be buying. So you see where I bought volatility 50. So let's see how it plays out. Okay, let's see how it plays out, whether we are coming out in profit or loss. So before the price, we see what the price will do. Even though some people will be like, are you not seeing this shooting star right here, which is a bearish signal? That's what we'll be kind of thinking. Okay, so but I will also share with you why. Okay, because this is 5 minutes time frame. These candlestick patterns, most of them are not strong. Okay, in 5 minutes time frame. If I see this kind of shooting star in 1 hour time frame, this long week, okay, I'm not going to enter this trade. But I know 5 minutes time frame, most of them, when you come down to 5 minutes time frame or 1 minute time frame, these candlesticks are not that strong. Okay, so that's why I'm entering this trade with my strategy. So how do you enter this trade? First, you need to see a clear uptrend or downtrend. Okay, this is for trending market, guys. You don't trade this on anything apart from trending markets. Okay, so you must see a clear uptrend or a clear downtrend. So if you see an uptrend, good. If you see a downtrend, good. If you see a ranging market, please, this strategy is not for a ranging market or even when the market is choppy. Now, if you look here, we have an uptrend. If I go to a higher time frame now, 1 hour, you're going to see that this is a clear uptrend, guys. That's number one thing you need to check. You have to check the trend. You have to check the trend. Okay, so this is an uptrend. So what else I need to do is to add up my indicators, which is 2 indicators, guys. I'm using just moving average. Okay, this is moving average right here, and this envelope. Okay, I'm using moving average, okay, and envelope. That's what I'm using, these 2 indicators. So how do we now use these 2 indicators to take our trade in 5 minutes time frame? So before I proceed, if you are new to my channel, consider subscribing to this channel. Don't forget to like my videos. Also leave a comment if you have any topic you want me to cover in the next video. I'll do that. So now allow the price to do whatever the price wants to do. Is a signal. The price showing us that, okay, there's this a support right here that is stopping me from pushing down. That is exactly what the price is saying. You can see how big, you can see the momentum of this candle here, this one, okay, you can see the momentum, but this one failed to continue with that momentum. Okay, that is the first signal I got. Okay, that's the first signal. Remember what I'm targeting. Look at the strategy here before I start explaining this for the candlesticks. Now all I need to do, all you need to observe is you want to see the price like this point. Let me share with you this. You can see the price here was moving up. Okay, and after that we discover this long wick, okay, candlestick, and it dragged the price back to our envelope. So you are waiting for when the price will be dragged back to our envelope. When the price come back to retest our envelope is a good entry point, guys. You can see, if you have seen this, okay, before, and enter a buy at this zone, you could have been making some money. Okay, so you're just waiting for a retest. So sometimes the price will not perfectly just stop here at this zone. You can see that this price stopped here and pushed the price back. Then the candlestick closes somewhere here. Okay, so but sometimes the price might you will see something like fake breakout. It's think that the price have break out of that region, like what is happening now. Okay, if you look here, it seems like the price have broken that our envelope. But when you look here, I still have my moving average 50, which is serving as support, which means I'm expecting that if I thought this price breaks this one, it's not going to break this one. Okay, so let's watch if the price is going to break this one, before going up. So we are going to see that in this trade we are coming out with profit. All right, now let's see. I'm still going to explain. Now I have the price going up. Okay, you can see the bullish power. After that, we discover this bearish movement down. Okay, so now when the price start coming down to this region, you are getting ready for your trade. Okay, so when you see a sign, you are waiting for a sign. So look at the sign I got. I discovered that this candlestick have failed to continue with this momentum that other ones are coming with. Okay, and look at another example again. This one has failed to continue with that momentum. You can see some that is the week. Okay, the downside and the upside, showing you that this particular, the buyers are losing. Some of them, some sorry, the sellers, some are closing. Okay, some are closing their trade. Okay, reducing the population of sellers in on this volatility 50. Okay, so I'm waiting for reversal any point from here. Okay, any point from here before our moving average 50. So what I would do is that I will just pause this video and come back and share with you how it plays out. Okay, so instead of wasting time, you can mark my time, mark the level and everything. So this is the current movement, guys. So this is where the price is. So let me also share with you the setup for this indicator. So if you want to try it out, start. Well, I still want to show you the end result of this video. Okay, so that you know. Remember, the reason why I entered is not just because the price have retested or break out from this zone. I entered because the price retested. That's number one condition. After checking the trend, we have seen that it's an uptrend, so the price is likely going to be pushing up. Okay, so once this envelope just serve like a magneto, is it magnets the price, like it drags the price to it. So once the price comes there, the next movement is upside. Okay, for an uptrend like this. Okay, so once the price retests your envelope, okay, you must make sure that your moving average 50 is below the price, like this one. You can see that black moving average right here. Okay, once you see it below the price and the price is now currently there where you have your envelope, okay, you start waiting for price reaction. You want to see the candlesticks reducing, the momentum reducing. Okay, you can see here is the best entry for this. You're supposed to enter the trade somewhere here. Okay, but when I discovered the momentum candlestick that breaks that line, I have to pause. I don't have to enter again because the candlestick, the momentum is high. I needed to see small candlesticks there, but this one is high, so I know it's going to break to the downside until I start seeing sign of reversal. And when I started seeing these candlesticks closing with wicks, okay, the longer one and this one, then our green candlestick. So once I discovered this first week, okay, this candlestick with long week, I entered my trade, and I entered this trade live. You guys are seeing it. Okay, so now I see another candlestick closes with wicks. Okay, instead of the candlestick supposed to continue with the momentum if the price will keep pushing down, but now I discovered that, okay, this is the point I will enter. Okay, then I entered my trade, and I said you guys should watch and see how it works. Now I'm going to show you the setups. I have the first indicator here as moving average 50. Okay, the moving average 50 method is exponential, apply to close. Okay, 4 pixels. Okay, then the second one is envelope. Okay, you have our envelope period 14, shift 0. We have deviation 0.100. Method is simple, apply to close. Okay, you can see the colors. You change it to any color of your choice. Okay, then 4 pixels. Okay, you just click on done and we are done. Okay, we are done. So this is it, this is it. So we want to see how it plays out. You can see we already in profit. Okay, we are in profit already. Okay, so let's watch and see how it plays out. Okay, so I've shared with you the setups. So and let's back test and see how these things work. Okay, you can see here it served that this indicator is practically serving as support. As this price keep going up, that is our envelope, and our moving average just serving as support. You can see when the price retested that zone, you see this movement to the upside. So let's keep back testing. You can see here it happened here. The price pullback was moving up, then pull back to this zone, then you enter your trade. So when you can see the difference between the one I entered and this one. The one I entered is the hard one. Okay, see the one you should be looking for this kind of reaction. Okay, I just use this one that is hard as a kind of example, so that if I can do it with this one, that means you can do it if you see the perfect one, which is this kind of entry here. Look at the perfect one, you make a lot of money here. Okay, you don't have to risk small money. You know, when I entered the trade, I started losing some money, but because I trust the strategy, I don't have to be afraid. I know it's going to go my direction. So now you see this point, the price retested, and you enter buy, then you make your money. Okay, you enter buy at this zone, you make your money. Okay, now look at another example. Okay, the price retested, you enter, or here is another retest, you enter. Anywhere here is retest, then here is just like a breakout before. So we are just looking for a retest. So when the price retested to this zone, you enter. But you must see, remember, you must see something like this. You know, when the price bounce here, you start seeing some long wicks. Okay, you see some long wicks, which is the hammer candlestick pattern right there, which is a bullish candlestick. Okay, when you start seeing this thing reacting, so if you see the price at this zone and the candlestick is coming with momentum, you shouldn't enter the trade. You should not enter, because probably it might break and keep going down. So you need to see the candlestick weak rejections, or the candlestick start reacting or consolidating at that zone, like what we have here. Okay, you can see when the price bounced to this point, you start seeing some candlestick reacting, you know, trying to, you know, lets you know that okay, this price is strong, and we are having I kind of see it's very difficult for us to break this price to the downside. Okay, so you must see some reaction before you jump into the trade. So for the fact that I said when the price pull back to our envelope, you should jump in, that's not what I'm saying. Once the price pull back to our envelope, you wait to see price reacting to the envelope. You wait to see some candlestick reaction. Okay, like what we have here. Okay, like what we have here, you can see the price here, and you see those consolidations, you see those wicks there. You can see price being rejected severally at that zone, so you know that this price is probably going to hold. Okay, the movement is going to hold. But if you see a momentum candlestick like this one, okay, you can see this candlestick, and a lot of sellers are here. You know, when you see this, you don't just jump in here because the price is now at our level, which is the envelope. Okay, you don't jump in here because the candlestick is definitely going to break here. So when this one form, you start seeing you can see the wick right there. Then this one confirms it again, you start seeing that the momentum have reduced. That's when you'll be planning to enter a buy on this trade. Please, I'm begging you, don't just jump in because you see the price at close to or at our envelope. Okay, you must see some reaction, some candlestick pattern or rejections right there to, you know, confirm that this price is going to go in your direction, guys. And also don't forget to check the trend. You can see how it works, guys, how it keeps working, retesting that zone and keep going. Okay, so if you look at this breakout again, you can see how perfect. You have a lot of red candlesticks. Okay, there is no green candlestick, so you should know that it's going to break to the downside because of the perfect downtrend you are having there. And we are only targeting a buy because we have seen that the price is trending up, so all we are looking for is a buy. So if the price is trending down, you'll be looking for a sell. Okay, but for now we are looking for a buy because the price is trending to the upside, guys. Okay, hope you enjoyed this video. Hope you see how everything plays out, and I was able to backtest to share with you how to, you know, do this. All right, so I'm still going to write this thing down for you, so that even though if you cannot hear me or you cannot maybe understand this with what I will write now, you'll be able to, you know, pick those things step by step. All right, so now if you look here, I'm going to write these things down. Okay, first thing, number one thing to check, okay, is the trend. Check the trend, guys. That's number one thing. If the price is trending up, that means you are buying, you are looking for buying opportunity. If the price is trending down, that means you are looking for selling opportunity. Now we have seen that the price is trending up, so we have identified the trend as an uptrend, guys. It's up. Okay, so checked. Number two is you have to check our envelope. Okay, you have to check our envelope and our moving average and make sure that they are below the price for an uptrend. Okay, now that's number 2. You check our 3 moving averages. Okay, but first of all, you have to add the moving average. That is, you have to add the indicator. Add indicators. Okay, so my eye there represents indicator, guys. Forget about this handwriting. The important is that we are making money. Is the tool I'm using. Okay, now number 3 is to check if the indicator you have added, if they are all below the price. Okay, they must be below the price. Okay, so number 4, you have to wait for the price to retest our envelope. Okay, wait for the price to retest our envelope. Okay, price should come back to our envelope. So once the price comes, you don't just jump in, you still wait for our number 5, the 5th condition. You have to see candlestick reaction, candles reacting to that level. Okay, so once you see candlestick reacting to the level, you now say, okay, this price is likely going to push up from this side. All right, now we are having a pullback. So first thing, the trend. Second thing you have to check, that is if it's an uptrend or a downtrend. So once you confirm the trend, then you add up your indicators. Okay, you add up your indicators. Then after adding your indicators, which is our envelope and our moving average, okay, once you finish adding the indicator, the next thing is to check if our lines, okay, the indicators are below the chart. Okay, if they are below the chart, they are going to be serving as support. Then you wait for the price to retest our level, our support level, which is the indicators. Once the price retests the indicators, okay, then wait for candlestick to start reacting to that level. So once you see candlestick reduce, the momentum reduce, the selling power reduce, you start seeing some wicks, long wicks, short wicks, and all that, then you see that this is a reaction. We have to enter our buy at that zone. Then after that, you enter your buy. Okay, that's the 5 things you need to consider before you start taking this trade. Okay, so currently we are on a pullback, guys. We are on a pullback for another movement. So after this pullback, I'm seeing the movement is going to be massive to the upside, guys. Okay, so the pullback is just creating the next point where we'll be setting our stop loss. Okay, the price is creating another swing low for our stop loss before we jump into the next impulsive move. Okay, so this is it, guys, for this video. Okay, you can test this thing out yourself and see how it plays out. Okay, I just entered the trade just for you to see that it works live. Okay, it's not like just backtesting. So you can check it yourself. The zoom level, you can use second zoom. Okay, second zoom level or third zoom level. Okay, second or third, you can see this one is my final zoom level. This is third zoom level. This is second zoom level. Okay, and this is the last. Okay, you have to check the zoom level also. The reason why you're checking the zoom level is that you need to see clearly, because if you have this kind of zoom, if you zoom out like this, you're not going to be seeing when the price is retesting. So you have to zoom in. Okay, you have to zoom in to see price reaction to the price, to the lines. Okay, you need to see when the price is retesting. You can use the final zoom, okay, like this one, which I use for the explanation for you to see clearly, or you can use the second zoom level or the third zoom level, guys. Okay, so this is it, guys. I hope you enjoyed this video. If you have not liked this video, please like the video. Don't forget to share and subscribe if you have not subscribed. Remember, this thing works both on volatility 75, 25, and you can see I'm using 50 for this example, guys. So this is basically what you did. You can see that the price have created a new swing low. Okay, look at the first one, the second swing low. So we are waiting for the price to push up to the upside, make more swing lows and swing highs, and go to our direction, guys. So this is it, is playing out. If you want to scalp this using this strategy, you can scalp. If you want to stay long, you can stay long. By now you might decide to lock in your profit, drag your stop loss to break even, which is where you enter the trade. Place your stop loss there, so that even if the price go against you, you are going to be making some money. Remember, if you are using it on 75 is highly volatile, so you must make sure you see the perfect entry, which is checking the candlestick reaction when it comes to that zone before you jump into the trade. Okay, so guys, this is it, guys. Try it out, leave a comment, and tell me how you see the strategy after trying it out. This is a strategy I've just decided to give you guys on volatility, so that you enjoy this, and I will see you guys in the next one. Enjoy. Bye for now, guys.